great to see all you today. And today we're gonna discuss the cryptocurrency and as well Bitcoin and where does it go next. And we see the recent prices of the crypto quite pumping. But let's first start with a brief description of the speakers. So let's start with Andreas. Can you introduce yourself and what you do?
Yes. Hello, everyone. My name is Andreas Vlachos. I've been working lately for Binance as the growth manager in the regions of Greece and Cyprus up until 2 weeks ago. And yeah, I've been in the crypto industry, both in the academic and the actual industry for 8 years now. And thank you all for being here.
Thank you, Dennis.
Hi, I'm Dennis, Berlin, Germany. I run Bitwala, which is a cryptocurrency wallet that connects to a bank account and the card, making it easy to actually use your precious Bitcoins.
Hi, my name is Max. I'm here on the crypto panel in my function as Chief Legal Officer of Blockpit and CEO of Accounting. What we do is namely providing a crypto taxation solution for the retail market in Europe, being loved by all the crypto traders, and also on the B2B and B2G level.
Hello, hi. My name is Jacob. I'm also from Austria and I'm the CEO, co-founder of consola.finance. And what we do is B2B software for crypto companies. So we automate the process of bringing the blockchain data into the bookkeeping software. Yeah, very glad to be here. Excited for the panel.
Hi, everybody. Nice to meet. And thanks for coming to hear us speak about crypto. I'm Yael Tamar. I'm the CEO and co-founder of DIBS Capital. And we're building a global network of brokers to facilitate transfer of private securities, which is a much larger market than public securities. So it's built on, obviously, on blockchain and is utilizing banking and fintech systems to bring democratization to private securities.
Thank you. And my name is Anna Tutova. I'm CEO of Coins Telegram. We have a news media company. We have a news website as well, PR marketing agency. And we are working on a documentary film about crypto and blockchain adoption and how it impacts people's lives. We started filming in El Salvador, the first country which adopted Bitcoin as official currency. As well, we did some filming in UAE, Europe and Asia. And we have the many top leaders of the industry like CZ, founder of Binance, Vitalik Buterin, creator Ethereum, and many others. And as well, I'm involved into fintech. I'm partner at fintech company called KYC Pay, and we help with opening of bank accounts, setting up crypto fiat on-ramps, off-ramps, and licensing. So let's start with our discussion. And yeah, as everybody knows, the cryptocurrency prices have risen significantly recently. Bitcoin has reached over $44,000. Today, Ethereum, it's already over $2,250. But today we see a slight correction. But still, what factors or catalysts do you see to be the driving force for the next hypercycle bull market, and how might this differ from the previous cycles? And as well, what trends in crypto do you see for the next year? And let's start with Yael. What are your thoughts on this?
Thank you, Anna. So crypto has evolved tremendously in the last 15 years it's been, and it's always driven by the latest product that came to the market, right? So in the previous cycle, it was DeFi and NFTs and the beginning of institutional adoption. And the institutions are continuing to move crypto into the new space with this potential approval of the Bitcoin spot ETF by about 11 US institutions. So I think that will continue driving the market. And on top of that, the new type of product, which is basically, it's called real-world asset tokenization, which essentially means traditional securities in just a very traditional sense, TradFi, with blockchain rails. And almost, again, it's driven by institutions once again. Every single large investment bank is issuing these securities on the blockchain. And it reverberates throughout crypto because that blockchain crypto go together in the investment sense.
Thank you. Jakob, what are your thoughts on this?
Yeah, in my opinion, I think the main drivers now for the next bull market is a complex interplay of like different reasons. In the previous panel, we already heard a lot about crypto regulation. This is for sure main driver. On the one hand, regulation can kill innovation, but as we heard before, it's also like setting the rules. Rules also can be a catalyst for innovation. So this is the first thing I see here. But then also, and we are working with companies together, Web3 companies, I'm doing their accounting for them. And we see that even though there's a bear market, we're still there. Maybe it ends soon, but the tech development did not start. So the players did really double down, and the people who are not like only interested in the price movements. So the noise is out for the last 1.5 to 2 years, and the tech teams could really focus on building great products, and the people or the teams who stay, they will also stay in the next bull market. So overall, I would say the tech got better, more secure, and we saw a lot of scams, we saw a lot of negative things in the industry that might be solved also with an improved tech infrastructure. So this is a reason I clearly see, as we heard, the institutions going into crypto, the term Bitcoin spot ETF, for sure a catalyst in my opinion. And last but not least, also macroeconomic factors. So last 2 years, I think we saw interest rates that nobody of us has seen a lifetime before. And that leads to instability. Instability for sure stops innovation or slows it down. And as soon as we have here a more stable environment, not meaning the interest rates need to go down where they were before, but just having a stable environment also could change the movement where crypto is going next.
Thank you. Yeah, I agree. We see now like much more mature market, and as well in terms of technology too. And yeah, now we quite discuss a lot of all this.
Can I just quickly add something to that?
Yeah.
Just saying so I don't think the regulation kills crypto assets or crypto asset developments. What I think is it just fosters it in a regulated way. So, and also the hypercycle. What we saw 2017 was ICOs. What we saw 2021 was NFT and DeFi's, like Yael said. And I think these were both hypercycles that were driven by the retail market. And the big difference, and this is what we see with where crypto goes next, is that the next hypercycle will be driven by institutionals. It will be driven by institutionals in a certain way that is different to all the cycles that were there before. Because right now, and this is something where we see also with regulation, that the hypercycle will, in my opinion, only affect those assets which can be regulated in a certain way. And this is where Dennis wants to jump in. Of course, Bitcoin, because Bitcoin is a real asset. It has a real value. And I think what is very important is that in the next hypercycle, and also for the longevity and mass adoption of crypto assets, that we don't have shitcoins taking over again like Doge. So it's really important that we have the certain regulation in place, and I think it's really good for us as a community and also for a market that the regulation is already there, and that certain countries have regulation in place. And if we have a hypercycle that kicks in and is regulated in a certain way, then we can grow in the right direction.
Can completely disagree, but I'll add just one point, which seems weird to me, is that we've attributing this next hypercycle to regulation when regulation is what hinders adoption in the first place. So nobody needs a damn ETF if you let institutionals buy spot Bitcoin and keep it in self-custody, but now we have a regulator that please finally lets us buy these or ETFs, and that's what the next cycle is based on that we're seeing now. So it's kind of like a cat chasing its own tail, pot kettle, chicken and egg kind of thing, and I would not attribute this cycle to regulation. We're just basically hanging on the regulator's teat to finally approve us, to let us buy some official Bitcoin when everybody here could have long done that.
Yeah, but therefore, then, as I said, it's a complex interplay of different reasons, and one of this is for sure also the institutional side who brings in new energy and new attention to the market.
Yeah, and actually I still see this recent pump driven mainly by institutionals and by the speculation of the soon approval of Bitcoin spot ETF. There are already 13 applications pending, but if you check the downloads of Coinbase or Binance app on iOS or Android or Google Market, it's still not many. So this recent pump is not driven really by the retail, and we see quite a big institutionalization of this industry. And Dennis, by the way, you mentioned before that you would like to compare Bitcoin ETF and gold ETF, so can you share your thoughts on this?
Well, first, if Coinbase ever reaches the #1 spot in App Store downloads, it's time to sell, I guess. That has been the fact twice now. One thing where you can compare or where you could make a prediction in terms of the impact that the Bitcoin ETF will have on the price of spot Bitcoin is actually the historical development of gold. Like nobody thought you would ever need a gold ETF, and everybody was holding ounces. And there are skeptics who say, okay, if everybody can buy the Bitcoin ETF, who would ever buy spot Bitcoin and self-custody it? But actually, in the wake of the first gold ETFs, also the sales of physical gold coins have increased. So I do agree that basically this Bitcoin ETF will bring new attention and give some sort of relevance to the underlying asset as an investment, even for private clients, and it will definitely buy the price. I would say that the last couple of weeks have shown institutions front running and filling up their stock to basically in anticipation of the approval of the ETF. So all that will flood the market on NYSE and etc. and wherever mid-January at the latest.
Thank you. Andreas, do you have anything to add to that?
Yeah, I also agree with the example you mentioned about gold. So it was basically the same discussion of back then in the industry that why gold ETF would be usable since anyone can have the ways to hold gold or any other commodity in a similar case. It's the same case now, I think. I think we're going to have broader adoption, obviously, although there will be drawbacks. ETFs defeat, in my personal opinion, the purpose of crypto, which is to be handled in a decentralized manner, self-custody of funds, security of funds to the hands of the users. But on the other hand, we understand that it's a way of embracing adoption and getting more institutions, mainly in the industry, which will ultimately help to the long-term Bitcoin holders as well.
I have an unpopular opinion, probably. For me, adoption of Bitcoin spot ETF is similar to a chicken walking into a KFC. It's basically, what do we think the institutions are doing this for? Why does Franklin Templeton and BlackRock and Bitwala, why does everybody want to have a Bitcoin spot ETF? Historically, all these public market products exist, and structured products, which is like thousands of useless products stuck together, and which reminds of 2008 mortgage crisis. Why do institutions make them? Well, number one, to confuse everybody, and number two, just to transfer money constantly between each other. I can create 1,000 useless products, bundle them up together, borrow a bunch of money against that product, sell that to another institution. Then they'll bundle up those together and they'll sell that to the third. Everybody will earn asset management fees, while all of us are making like 1% to 2% interest rate on fiat money, literally. So on the one hand, everybody's super excited about the ETF because it sounds like the government or the regulator is approving it, so it's mainstream adoption. But it's just basically because none of us really understand what an ETF is and why it's being adopted by institutions in the first place. So in the short term, yeah, everything's gonna drive, bull market, fantastic, we're gonna celebrate, but we already have the perfect asset that we can custody ourselves in our cold wallets or whatever wallet you wanna have. We have the Bitcoin. The crypto people don't need the Bitcoin ETF, really. But
Yeah, so I fully agree with you, and you described the effects of like what happens after Bitcoin spot ETF can be left correctly. I agree with that, but I think it's also important to understand that if you have a Bitcoin ETF, you open doors to a lot of funds and like institutions with big pockets that are just not able to invest in the current ways we already used to invest in Bitcoin. And all this new liquidity flowing in, that would just be a catalyst for price movement. But overall, I'm also a big believer in the idea of crypto and not building a regulated product on top to even reach this kind of institutions. But on the other hand, I think it's the only way to bring those players being exposed to crypto assets itself. So I agree with you, but we need it as a next step to bring also more trust and stability into the market.
Can I just say one thing?
Yeah, sure.
Yael really hit the nail on the head, on the nail. So the ETF is not going to change anything. It's just a driver for the hypercycle right now. It's actually making Bitcoin really overvalued at the moment for the market in general, in my opinion. And I'm gonna, once the ETF gets approved, it will go up and the next day it crashes. My personal opinion, because I think that so many people bought in because of the BlackRock ETF, but it's not going to change anything for the mass adoption part, because this is the topic of our panel, is where crypto goes next. And the question that I want to raise, and it's a really unpopular opinion, is: are we even relevant at the moment in general? Because literally, what use case do we provide to the average Joe? So if I use ChatGPT, for example, I can sit like a 5-year-old in front of the computer, ask ChatGPT a question. It's going to give them an answer. It's really easy accessible. It gives them an instant benefit. They see how they can use it. It's really made for mass adoption. However, the issue is what we are doing right now is trading some assets in circles, involving also some shitcoins and trying to earn money with that. That's not a practical use case, and this is not where crypto can grow. So the question is the crypto asset market as we think of right now, which is as a speculative asset and asset class, and this is also in regards to the ETF, this is not going to drive the market. But what's going to drive the market is tokenization of real-life assets, and the result of bringing real-life assets onto a blockchain, digital identity, etc. Yes, Dennis?
Yeah, so there's 3 different topics here. First, there's 6 Caucasians that are Bitcoiners talking about crypto adoption, mainstreaming it. We're insignificant. We are the crypto bourgeoisie, and mainstream, real use case crypto adoption for people will not come from Middle Europe. It will come from Latin America, North Africa, Southeast Asia, from people who have real problems other than just spending Bitcoin or Orange Coin up. Then there's the institutional adoption, which really doesn't play a factor in pricing Bitcoin or crypto, because if you guys can tokenize a house in Manhattan on some layer 3 blockchain, that doesn't really change a thing for us, right? And then there's the actual factual use case where people need to get the hell off fiat in their respective ultra inflationary currencies and have a safeguard against that, and that is where the real use case comes from. And I agree, and I think I would have just voted for end of discussion after your last contribution, because the ETF is just Orange Coin up. The regulator makes us jump through hoops to please buy an ETF, which is totally unnecessary for us. But I think the real adoption will be not from where we're sitting right now.
Yeah, Max commented that after Bitcoin spot ETFs approved, there may be the price drop. I wouldn't speculate on the price predictions, but yeah, there is the saying, buys rumors, sells the news. So yeah, of course, now everybody is so hyped on the news of potential Bitcoin spot ETF approvals. But on the other hand, all these investment managers who currently offering like stocks or other products to their investors, to their clients, they will be just going out and will be offering in future to their clients to buy this Bitcoin spot ETF, so it will drive new investors to the industry. And yeah, there was already touched the point on tokenization, and now we see as well quite a lot of news around tokenization and all these banks and big asset managers exploring tokenization, even building their own custody solutions for digital assets. There are like a lot of news with the predictions that real world assets tokenization may hit $1 trillion market. So Yael, since you're in this industry and run a company of tokenization of securities and as well real estate, so what are your views on the development of tokenization, and as well which industries may be impacted the most by tokenization?
Thank you, Anna. So maybe once and for all we can agree on what tokenization is, like here in this small forum. You know, it's first of all, tokenization is not something that by itself brings any liquidity. It's kind of like saying that putting something on the cloud creates new data. No, you take existing data, you put it on the cloud. You take existing assets, you securitize them, meaning you issue some sort of financial share or derivative, and then you just push it, you know, you record the transactions on the blockchain instead of recording it in an Excel spreadsheet or a NASDAQ. That's all. Again, you take an asset, you custody it, you issue a security. Now that security is recorded on a blockchain ledger instead of in a spreadsheet. Okay, the ownership is recorded on the blockchain ledger. That's all tokenization is. It is absolutely useless without the ability to sell the said asset to the investors. Now, since it is considered a security, unlike Bitcoin or some other cryptocurrencies, you can't easily sell it to retail investors through stock exchanges or through crypto exchanges like Coinbase. So you need to sell it to either institutions or through brokers. So, you know, our plan with what we started, just to kind of showcase the first tokenization use case with real estate, which we sold through the brokers, right? Through, not we sold, the issuer sold it through the brokers. It was Aspen Coin in 2018. That was Solablock, the predecessor of our current company that we call DIBS. Why did we call it DIBS? Because essentially you need some sort of a network like SWIFT through which you move fiat currency. You need a network through which you move securities. Ultimately, real-world asset tokens, they're securities. They're just distributed and recorded digitally. That's all. So you need an ecosystem which has compliant distributors all along the way that can move the security that I issue for my company to any investor out there, right? So that's basically what I believe will fuel tokenization, is the existence of these rails, right? Of these infrastructures and payment companies.
Thank you. Yeah, it's really easy the process itself and the settlement, but you need investors who will be interested in buying those securities. And Max, what would you like to add?
Can I just quickly say something also, not just being clear about tokenization, about the process, but I'm kind of scared at the moment, to be honest, that tokenization is kind of the next big bubble, because there's so much scam in the area as well, that I can say, okay, I can tokenize something, but the issue is what's the tokenomics behind it? Like, what does it even make sense from an economic point of view? And actually, there's so little people that have actual clue if tokenization in a specific use case makes sense, or even makes sense. So I'm a bit scared of that, because often people, for example, talk about tokenization of IP rights. But what they don't understand is that if I tokenize my IP rights, I can't just transfer the token and the other person holds the IP rights. Because, for example, in the United States, besides of bonds, tokenized bonds, each and every transfer in the United States by private law has to be done exactly the same way like with the traditional asset. So if I own an IP right and it's registered, for example, with the USTPO, and I transfer my IP right token to another party, then this other party has to be in the USTPO register as well. Otherwise, I don't own the IP rights. So and it's a misconception that is generally widespread, that if I own the token, I own the real thing. And this is what I always call...
You own the economic rights.
Exactly.
When you own a token, yeah.
Exactly, you own the economic rights, which is not the case. You often just have a claim against the owner, which is in the register still.
Okay.
So, huge problem there.
Yeah, I agree with you. Andreas, do you have anything to add to that?
About tokenization, I want to just address a bit some use cases beyond finance, from what we've talked about already, like real estate, for example. We see some pilot runs being made from several startups. So in the same way that we transact funds and money, fractionalization can be done in land, for example. And it remains to be seen if we'll have land registries from governmental authorities adopting these kinds of use cases. I think Georgia was a country that adopted and ran a pilot on its own land registry, but also in other industries like digital art, for example. We're already witnessing quite a lot of traction in the NFT space on that end, and obviously digital identities as well. The blockchain technology has the power to revolutionize so many industries, for the end users to avoid costs through tokenization. But we need to see some more embracement from the industry itself, more pilot runs, more frameworks, and specifically more guidelines, regulatory guidelines, promoting these kinds of investments and innovation.
Thank you. And another topic I would like to discuss CBDCs. And we already see that over 130 countries are somehow implementing or exploring CBDCs. We see different CBDCs pilots. Even International Monetary Fund released recently their handbook for the governments on the CBDCs. So how do you see in the future the coexistence of CBDCs and already existing cryptocurrencies? And what implications might CBDCs have on the adoption and the use of the cryptocurrencies? So let's start with Jakob.
Yeah, sure. So in my opinion, the future will be like consisting of a coexistence of CBDCs and existing cryptocurrencies. It might be, as you just mentioned, might be a gateway. I think, yes, it might be a gateway to mass adoption, but not sure if it's in a positive way. It is kind of a forced mass adoption if national currency on cryptocurrency or blockchain technology is enrolled and enforced on the population. On the one hand, the education and usage of it is increased. So also people who are now completely ignoring the crypto and blockchain innovation that's already happening since more than a decade will be in touch with the new technology. For sure, there's argumentation of like efficiency and more transparency, but I think we cannot ignore the really big downsides. First of all, in this smart contract, government can decide in how much control they want to enforce. I mean, we have extreme examples of China, just as a random example, having a CBDC with a smart contract where you are obliged to use the assets within a specific time period. It then becomes obsolete and not usable anymore. So if you bring that in, it's a really big risk that you have more efficiency, but also you lose a lot in control over your own holdings. So big risk, big potential, it's very difficult to say.
So everybody, all the talks here that we had today, keynote speakers, embedded finance, MasterCard, forget it. once the government has digital money and very, very cheap technology rails to send payments between people, you don't need any of that. And all of these ecosystems and startups that have, profitability right now are not going to have any of that. All of that's going to go into some sort of a government provider that, again, Web3, blockchain, revolutionary in terms of the costs of transactions. Even if, we have now, gas fees and so on and so forth, the private network and the scale is going to make it super cheap for the government to deal with payments and control everything. Regulation compliance goes all into the hands and pockets of the government. Although a new industry to provide, cyber protections, applications on top of that will emerge. Definitely. Now we'll have the digital money. By the way, it's not going to change anything for us. We already use digital money almost everywhere. We use cash in some places, which is where people are going to use Bitcoin and decentralized money. So on the one hand, everybody here should be prepared and adopt for the new reality of these CBDCs in the next couple of years. But it's definitely going to happen because it's super good for the government, not that amazing for us.
Andreas, what's your take on that?
First, we have to differentiate between the two main types of CBDCs, which is wholesale and retail CBDCs. Retail CBDCs, as they are described in several papers and projects and white papers, it's going to be the everyday money, let's say, digital money that the public will transact with. The same way that we send money now from a bank to a user in the same bank or another bank, those would be the use of the retail CBDCs for our everyday use. And wholesale CBDCs will be mostly for referencing settlements between interbank transactions between themselves. So for me, it's a similar discussion like the one we had with ETFs. It again, for me, CBDCs, they defeat the purpose of why we are all here, the purpose that Bitcoin was created, which is decentralization and self-custody of funds. And this comes from a person that used to work in the biggest crypto organization until 2 weeks ago. But it's my belief that CBDCs will not solve major issues that we are now going through. It's going to be just another interface. It's going to be used by the public within a wallet, just like we use bag money right now. And it remains to be seen if the banks and the central banks will indeed use this technology to make procedures more efficient, like less costly for the users, with less friction and with less intermediaries. But I think that for the crypto community, it doesn't really solve a lot of problems.
Thank you, Max.
So, CBDC on a wholesale level, yes. On a retail level, it's a bit difficult. I think, like Yael said, there's going to be certain states that are going to misuse CBDCs. It's already happening. We have issues with CBDCs. For example, if we look at the e-yuan that was traded, where the digital asset was trading 10% over the actual cash. So that's an issue. So that the token was worth more than the cash it was referring to. So that's actually a systemic risk for a country, if that happens. So because it was done badly. That's the first thing. Second thing is, in the European Union, talking about the digital euro, I was involved into the discussions there with the Commission and the ECB. A big issue is that the central banks in Europe didn't want to give up their sovereignty to the ECB to host a digital euro that was based on a blockchain. So how should that be even done, right? Right now, what we see with the digital euro, it's basically it's digital money that we have anyways, and it's a dead project already. It has nothing to do with blockchain. So in Europe, do I see a retail CBDC? No. Do I see a wholesale CBDC? Yes, maybe. I think what will be way more important, way more scalable than CBDCs is stablecoins. It's also something that we see under MiCA. We We have stablecoins regulated thereunder. I mean, they're not called stablecoins. By the way, the only passage that refers to stablecoins is recital 82 or so, referring to algorithmic stablecoins. So I wouldn't even use the word stablecoin. However, stablecoin is going to be very important for the retail sector. I think for the wholesale sector, we can talk about CBDCs. Generally speaking, privacy is going to be a big issue that needs to be dealt with. I mean, there is new technologies emerging, like zero-knowledge proof, etc. Like also, interestingly enough, the people that worked on Tornado Cash are now working on Tornado Cash as an option for granting privacy. I had a guy, they are now building privacy pools, for example, that enable individual traders to keep their privacy whilst paying. Because I think essentially by transferring our payment system to a blockchain, we need to be very careful. GDPR is a gold standard globally and shall protect privacy, and privacy is in most countries a constitutional right. It's something very important that we have to be aware of. It's something very hard to protect when you conduct transfers on a blockchain, because I mean the blockchain is very transparent. So to keep that right balance between privacy and a CBDC is really hard in my opinion. Therefore, I would say for retail market, stablecoins, for wholesale CBDC.
Thank you. Yes, there is quite a lot, much more to be discussed, but unfortunately we are running out of time. But thanks everybody for the great discussion.